Good morning, everybody. How's everyone doing today? Hope everyone had a nice weekend. Quick look at our pound Aussie this morning. First trade of the day. Target 1, 14 pips. It's a minimum target. 10 pips is our minimum. 14, a little more, but that counts. Stop moves to break even, and we're done. So one and done. There's a second trade here for anyone trading a 9 a.m. session. That one's got to go to target 2 because target 1 is too small. It's got to go to target 1 and go 12 pips. 10 pips plus 2 pips of spread in order to move the stop to break even. So literally you could see where that is, that little dot. That's 1 pip in front of a 13 pip target 2. So we'll see if we can get there, but that's how that works. And it looks like it is, well, just got to break even now. So if you're in that trade, move your stop to break even. And Dawn, I was just reading your comments, and obviously some brokers are going to be a little different. So I guess my advice is that if our system hits a target, you're in the trade a day service, so you get the message and your system didn't, my recommendation is you mark it out immediately of that position. And if you're using FX Synergy, it's pretty easy just to hit the button, get out with the quarter of your trade or whatever. Even if you want to get 20%, if you're trailing, you could use one of the other little fast exit buttons. They've got buttons you could just click on and boom, you're out. That's what I would do. You get a partial profit, but that's better than having the market go all the way back and stopping you out for break even. So there's no perfection, but you can have maneuvers that you just have to do, and that just becomes part of your routine. You want to follow our signals as best you can because that's what's generating the trades. That's what's guiding our trade decisions. So like I'm trading with Owanda also. I have the benefit of also watching my charts on TradeStation. If TradeStation hits the target and Owanda didn't, and I'm still in the trade, I'm clicking on that button. You also have to click on the button that erases or deletes the position when you tell Synergy to come off with 20% at target 1. You want to delete that command also. It's a little X, you just push it, gone. Really simple, really fast. You just have to get used to it. Anyway, that's what I would recommend. So it did hit target 2. 40% at the minimum or half the position, depending on if you're trailing or not. I personally just trade to the targets. I don't usually trail personally. So for me, it's like 25 and 50%. Half the position comes off at target 2 in this case. But another one and done. This is our expanded 9 a.m. session for the trade a day. So there you go. Pretty straightforward. Nice move in crude. Too bad it happened too soon. So the first trade in crude with the 9 a.m. mini session was a loser this morning. I have to wait for another one. Of course, the squeeze zone keeping this trade out and on the sideline. So still flat there. Of course, the markets are now open. Got a short on the YM, heads up, 26,749. That one moved really fast. Yeah, unfortunately, probably too fast. I think that Forex traders need to be extremely careful. It is possible that tomorrow, if we see that the spreads are going cuckoo, tomorrow, of course, being a pretty historic day, I'm sure you're all aware, we may not even trade tomorrow with the Forex services. If the spreads are like all over the map, then we might just sit it out and take the day off. No real precedent that we know, that I know, to point to. In regards to trading in general, I would just be very careful tomorrow, I think. Maybe Wednesday, I don't know. Headline news is going to rattle the markets as stuff comes out, and whether it's true or believable or not, that doesn't even matter. The Russell got long while I was talking. Looks like it went really fast, but it did come down and touch the entry. Anyone's in the Russell, you should be at break even. And another long on the YM. That's a tough one. With that descending moving average crossing over the 200, this looks like it wants to go down, not up. And the Russell now with a short. So pretty choppy action, actually. Really fast moving price action. So if the YM comes up again, I mean, that long's still in effect, but there's a short now, and I would adjust that probably. It's a pretty large trade, too. Look at the size of those targets. Go down to 699 or 698 even. There it goes. It's in. It's short regardless. And look at it fly. Yeah, be careful right now. Trading conditions are really, they're fast. Fast market conditions could mean terrible fills. There's a short on crude. Got to adjust that down. I'd go 39 on that one. All right, so the YM, as you can see, has already hit money management and then stopped out. And yeah, these are treacherous trading conditions, guys. Be very careful. Meanwhile, the pound Aussie has pushed through its third target. That one's not treacherous. That one's trading as simple as it gets. Roger, FX Synergy plugs into the Owanda charts. I use MT4, and FX Synergy just reads everything off of MT4. I don't touch MT4. That's like the conduit, the pipeline. FX Synergy, those are all the buttons. That's the interface. So for example, here's FX Synergy, and all these quotes are coming in from Owanda. So, I mean, I've got way too many pairs up here. I don't need them, but for swing trading, I guess it's good. So I would just open up the prep tool on pound Aussie, have it pre-set up where you got your risk in place like this. There, 2% risk. Then all I have to do is type in the entry and the stop and hit commit. It knows if it's a buy stop, buy limit, sell stop, sell limit. It knows that automatically. Then I hit commit and it becomes a pending order. When it gets filled, it becomes a market order. It's already in other words, it's in the market. Once it's in the market, I can click on the partial. You'll see the trade here. I can click on partial and then tell it what percentage to take off at each price level. And then the entire trade is managed. Of course, I have to move the stop when it gets to break even, which I do over here where the stop loss is, SL for stop loss. I just type in the new stop. And, I mean, it's as simple as it gets. Yeah, you have to type stuff in and be careful. I know some people are just copying it right off of the message that's being sent out on Discord, which is fine. You can do that too. But that's basically it. It's really simple. You practice it and get really good at it. And I never touch Owanda. I'm sorry. It's going into Owanda. I never touch MT4. I don't care about it. I don't look at it. I know if I'm filled or if I'm not filled. If I'm not filled and TradeStation hit the target, maybe Owanda didn't, then I'm just hitting the market out button for that position. So that's the other thing. Here, let me just show you really quick, because this is a sim account here. I got my real one on another computer. But let's just say I'm in this trade, right? Let's go short. Notice it put on a 4.61 lot size because I have a preset of 2%. And this is a sim account with, you know, $100 gazillion. I think it started with 50 grand or whatever. So it knows that 4.61 is 2%. And it also, look, it knows the pip value, $7.04 a pip. And it doesn't know the stop or entry because I market it in. So it's just going to take, you know, what's 2% of my whole account? Let's go short. I mean, I probably have presets. Actually, I'm sorry. It's based on a 30 pip stop loss because that's a preset that I clicked on. So it takes the 30 pip stop loss, the $7.04 a pip, the value of my account, and it automatically knows what 2% is. 4 full-size lots, 6 mini lots, and 1 micro, 4.61. Pretty precise. So now what I can do, notice it's in market, that means it's a live trade. If I go to partial, I can say, okay, let's take 33% off, and I could either say how many pips of profit, or I could put in an exact price, which would be the target, right? So you type in the exact price, maybe the target's 3.5, well, no, it's not that. Let me just move this out of the way a little and show you what I mean. Let's just say the target is 18319. So I come off 33% at the target of 1.8319. Now once a third comes off, maybe I want to take off now half of the rest of my position at another target even lower. So ultimately you're going to use the targets that are in the data window or being sent on Discord or whatever. Right? And so you set up the whole trade to scale out. So it knows your position size. It knows how much. Now, if I were to put the trade in like I showed you originally with the prep tool, then it's going to take your entry and the stop and the 2%, and it's going to know how much to risk every single time. So remember I said, let's just say, here, I'll put in a number here just to finish this. So we'll just go we'll go 1.8309, just for example. All right, so now, and then of course I could put my final target over here where it says take profit, so that's your final target, or leave it empty and just let it trail. Here's where you're going to be changing your stop right there. Every time you move your stop, you just move that, type in a new number. But when it hits my target, you're going to see the lot size go down a third, etc. Now let's say that it barely misses my target, but on TradeStation it hit the target, and I want to get out of that position really fast. Well, remember I had 33%, a third for that target. Maybe it misses by 0.4 of a pip or barely misses. I quickly come over to the 1/3 button here and hit. As soon as I click it, it instantly exits a third of my position, but I still have this in here. So I want to get rid of that too, so it doesn't take me out if it comes back down. So there, I just erased both those. Look at my lot size, it's gone down. And you just trade with this, that's it. And there's going to be new tools. If you were on the training session the other day, we had the developer and co-owner of this amazing tool. Great guy. He and I are going to be, we're developing new things, by the way, together. But anyway, he's creating something that when we send out our trade a day alert, the entire trade will be populated just like if you were to have put it in to this by yourself, and then all you have to do is hit the send button. You won't have to type anything in. The whole trade will be prepared. Not bad, huh? Eventually you'll be able to just get a signal on your cell phone and hit go, and that'll be that for those that want to trade like that. So that's what's happening. But this is why we use FX Synergy, and this is why this is worth the money, like $30 a month. He gives us a $20% discount, because this is actually more than $30 a month. It's worth it. People that join this never quit. It's pretty amazing. Now, if you were to try to manage this trade with just straight old MT4, you'd be like the guy jumping around in the one-legged butt-kicking contest. Everyone else using FX Synergy's got two legs, but you're still hopping around on one leg, getting your butt kicked. That's the difference. Don't let tools be the thing that hold you back. That's like top high-level advice. Oh, by the way, this is a stupid, bogus, random trade, and I want to close it. I just click the X button here, and the whole trade is now gone. Closes out instantly. So click button simplicity. The biggest hurdle that you have to get over and get used to is opening up your prep tool. You can do this in advance, so you could have these two things done where you hit risk and hit 2%, and then just wait for your trade. And you know, you might even type in 1.83, and then all you have to do is type in the next two digits when the trade happens. So you could practice getting set up. I mean, you could have the stop loss also pre-set up where you have 1.83, and then all you have to do, I wouldn't probably do the stop loss, but I would definitely do the entry. And then you just have to type in two numbers. So you could prepare. You could like be ready. You could start practicing like that. Everything you do in advance before the trade is going to give you speed of execution, and you could practice it. So that's a pro tip. Then it becomes really easy. But I will say, use your eyeballs. Be careful with your fingers. Don't try to go so fast that you're typing in wrong numbers. Be really careful that you are accurate. That also takes practice. Just look at what you're doing. Look at the keyboard when you're pushing it with your finger. Just little things like that will make a huge difference. Because the last thing you want to do is hit a 7 when you meant to hit a 4, and then you hit send, and then you wonder why your trade got all screwed up. So just be careful, that's all. At least until that tool is developed, when it's all pre-populated for us. It's going to be amazing. The other thing is, just so you know, is I have this running on a virtual machine 24/7 and not on my computer. Now this is for training, and this is my sim account just to show you guys what to do, but my real account is sitting on a virtual machine. I have it on my other computer, just like a browser window. And that's what I use to place all my trades. And that way it's running 24/7. Also, if you're swing trading also, you can't day trade the pound Aussie and swing trade it in the same account. Those trades will come into conflict. Don't forget the FIFO rules, first in, first out. So same with the pound yen. If you're doing a daily chart, you don't do the 4-hour trade plan. You have to choose one or the other, or use a second account. That means another FX Synergy license. Probably another, I don't know if you have them running on the same virtual machine. I've never tried it. I just have the one account. But it does complicate things. Just choose one. You don't have to get every single pip out of the market. Any questions? The Trade Today alert service has been phenomenal. We started October 1st. Today is November 2nd. We're 1 month in. I know there's been a learning curve for a lot of you, and some of you are still in it. That's to be expected. But the actual strategy, the pure dots on the chart strategy, it's lost 3 sessions in a month. Javier, if you're going to day trade or swing trade, you can't do the same pair in the same account because the trades will come into conflict. You know, pick one. You're either going to swing trade the pound Aussie or you're going to day trade it. With the Japanese yen, the pound yen, we have the daily chart, we have the 4-hour chart. Choose one. Can't do them both in the same trading account because one could be long, one could be short. They'll be in conflict. You have to stick with your trade plan no matter what. And if you want to do both, you need a second account to do more than one pair, or they will be in conflict with one another. John says you can run multiple MT4 terminals on a single VPS. So there you go. You can do it. I don't know that FX Synergy will give you a multi-account license. They might have that. I don't know. I think you just got to probably subscribe to another. I don't know. Haven't gotten that far with Martin. I don't do that anyway, so I guess I never bothered to ask him. So trade a day is up 500 pips for the month, not including what just happened. The added extended session. Yeah, right. Well, that just started. But 500 pips in a month, I wouldn't expect that every month. Some months are going to lose. I would say the average is between 200 to 250 a month if you were to look at a lot of months over time. So you have your 500 month. Another month might be 10 pips, might be minus 100 pips. Another month might be 300 pips, et cetera, but it averages out to around, I'm just going to say, so that we under-promise and over-deliver, I'm going to say 200 pips a month. But really, it's probably more like 250. And that's just our perfect trade station setups. That has nothing to do with what you guys are doing in reality. That's going to be all over the map. But the better you get at it, the more you practice. Making money is relative in this business. You make money consistently. You grow your account with that sticking with your risk percentage. If you're risking money that you really don't care about, in other words, you can kiss it goodbye and you'll be fine, maybe you go 3% and be more aggressive. But if you really care about your account and you don't want to kiss it goodbye, stick with 2%. And now I'm only saying 2% after you're well practiced, you know what you're doing, you can execute the trades, you can handle yourself when the markets are fast, you know your maneuvers, then you risk 2%, not before. Don't expect to drive a race car if you don't even know how to drive a putt-putt car, right? Yeah, I think it's just one computer. So that's the thing. Each swing trading, day trade, these are all your businesses, right? Businesses have expenses. It's okay as long as it pays for itself. Yeah, I just don't know, John. Here's the thing. Your whole point about a desktop and a laptop, if you have a VPS, you could access it from your desktop and your laptop. So then you only need the one license. You pop it on the VPS. And I have a good one, so I put it in the member site. The one I'm using works great. I know Awanda offers one too, but I like the one I got. I've never had a problem with it ever, and that's a big endorsement. So, I mean, once you've practiced and you can execute the trades, 2%, maybe when you've grown your account, let's say you're starting small. Let's say you got a $2,000 account. And let's say you work really hard at it and you ultimately grow it to $3,000 or $2,500. You decide. Let that be then a buffer. Like when you get above that specific milestone, whether it be 500 in profit or 1,000 more in profit, then you go to 3%. If you dip below that number, go back to 2%. And like this, you can really get aggressive and still protect your money. So there's an idea for you. Just think it through. Think what's going to work for you. There could be multiple losses in a row, and I guarantee you there will be. Which level of service? I'm just using the basic minimum, John. Seems to work fine. It takes a little longer to update the software when there's a Windows update. You have to treat it like your own computer. So when there's a Windows update, shut everything down, update the Windows, restart it like you'd restart a computer, reconnect with your remote access, open a Wanda, open FX Synergy. It'll remember the trades that are in. It'll remember everything, basically, that you put in. As long as you place the trades when the markets were open, it'll remember. Because those trades are sitting on MT4. They're sitting in your broker, and FX Synergy is going to read it. It's going to know it. Double check, make sure that's, if you place a trade on the weekend, it won't let you. Like when the markets are closed, it's not even going to let you place a trade. The training session's recorded. Kevin's working on producing it. There were some technical issues over the weekend. A corrupted file kept crashing the computer. That's really aggravating, but it just goes to show we're dealing with the world in the world of imperfections. Technology, artificial intelligence is pretty dumb. So a corrupted file kept, he had to start over basically. So he wasted his whole weekend with garbage. And he's almost done. It'll be ready. Yeah, I wouldn't even use stealth mode unless you really find that your broker is, like you need to change brokers. I don't use stealth mode. In the meantime, what do I do to get ready? What do you mean? Did you log in to the member site? I'd say start there. Did you get your VPS set up, or are you going to do that? Did you get FX Synergy set up? Do you have your account open with the Wanda? All those things. Did you download Discord? Did you get it connected to the channel? Okay, so now what? I don't understand what you're asking. Sounds like you're ready to go. Practice in sim mode. I mean, do a week or two just practicing in sim mode. Okay, well, if you didn't get that yet, you don't need a Wanda, you need MT4. A Wanda is the broker I recommend. And if you go with the core plus commission pricing, you'll get your spread down to where it needs to be, right around 2 pips, sometimes less. Like right now, it's 2.5 to 3 pips without the commission pricing. With the commission pricing, it's under 2 pips. It's like 1 something. So you want to go core plus commission pricing. You got a contact there, Moheb, really great guy. He'll help you. Just be patient. But you could also log into awanda.com with your account number and choose core plus commission pricing, and then you have to get the right quotes. It changes the quotes. And then those have to be, you have to open one of those charts and pop in the FX Synergy template onto one of those core plus commission quotes. I think for me it's like pound Aussie -9, something like that. But you need MT4 in order to put FX Synergy onto it. Wanda gives you a free MT4 like most brokers do. Again, it doesn't have to be a Wanda. If you're going to use FX Synergy, you have to have MT4. Remember, MT4 is crap for trading, for like the kind of trading we do, but it's fantastic when you apply the trade manager, which is what FX Synergy is. Understand? On the YouTube channel that Kevin just put the link to, I even had my daughter record a short video on how to use Synergy just to show how easy it is. Basically, it goes through the steps that I kind of just showed you a little while ago. But you could watch that. Once you've done it a few times, you're like, oh my God, how have I been trading without this for so long? And Thinkorswim doesn't even have a commission pricing structure anymore. So the problem with that, I like the active trading window in principle. Same with maybe Ninja with their dome, or chart trading maybe, although I don't know, I've never done it. But the spreads are too big. They don't have the commission pricing. You're going to pay too much in spread. So that, to me, is a bad idea. She's smarter than most people, Roger. Valedictorian. Doesn't matter though. It's like what she's not really, you know, trading to her is like, it's more of a hobby than anything else. She's really involved with school right now, right? She's at Haas Business School in Berkeley, so you know, trading to her is an afterthought almost. And the thing is, that's why I had her do it. Because if she can do it without really knowing much other than just the few things I've shown her, anyone can do it. So while she's smarter than most people in most things, I don't think she's smarter than you when it comes to trading. I doubt that. Right? She's way smarter than me. I'll be the first to admit that too. That's neither here nor there. The smartest people in the world don't make good traders. Yeah, so John, that's pretty interesting. I mean, if you have any experience or know anything about using NinjaTrader with a Wanda, you know, let everyone know. I just don't. I don't know any of that. I've got a Ninja license. I just don't use it. Stefan, good. I'm glad you're thinking about backtesting, and hopefully you're thinking of using the UTA spreadsheet. Yeah, you should definitely be backtesting on the actual contract for sure. Don't use continuous charts for backtesting. If you're running automation, which you really shouldn't do for day trading unless you're just trying to get some big high-level, you know, overarching pieces of data like, you know, trying different balance lines or different moving averages over a lot of trades, just realize that a percentage of those trades are going to be bogus and crap. You know, it's great to use for swing trading equities, maybe Forex, but not for day trading futures. You got to use the UTA spreadsheet. Yeah, use this exactly. Don't, and also the prices change. Like with continuous charts, the prices that happened in the past on those charts did not happen in reality because they back adjust as the charts move forward each day in order to smooth out the gaps between contracts. And they also roll over to the new contract way too soon before the volume moves over. So there's a lot of problems with continuous charts. 100% backtest with the contract, which means if you're using automation, that's like really hard to do, right? Because you can only get so much data on a 1 month crude oil chart, 20 sessions, maybe 21 or 22. And you have to change to a new chart. You can't really do that with automation. You would have to use a continuous chart and live with all the problems that that presents. That's why we only use it to get like hints of high-level info. Then we take that hint and we make a note of it and we pay attention to it while we're back testing manually with the spreadsheet. Yeah, each contract, the front contract, and you have to know when to roll over. I usually go on the 18th of the month for the energies. For the E-minis, it's going to be the second Friday of the new quarter. Is when you want to be on the new contract. So for example, December, the Z contract, I mean, we're in the Z contract, the H contract, the March 2021 contract, we will roll into on Friday the 11th, That's the day you want to be on the H 2021 contract for the E-minis, for example. I know DAX futures rolls over later. It's more towards the end of the month. I forget the day. If you're doing DAX futures, you would not roll over on this day like the E-minis. You would wait. You have to follow the volume. So you could open up both charts, look at the volume, and then when the volume is more on the new chart, you go there and you never look back. So for example, on TradeStation, the volume is right here. So you can have both charts open, the current one and the new one. Now that's for live trading. If you're looking at back testing and you go, yeah, okay, but I don't know when the volume was for the December contract when you rolled over in September, you could put on a volume indicator on a daily chart and you'll see the spike. You'll see the volume change from one to the other. Just open up both charts, either a daily or some bigger high-level chart, and just go when the volume moves over. That's when you go to the new contract. But I know with the E-minis, it's the second Friday of the quarter. So for December, we got into the December contract on this day, on September 11th, the second Friday. So on the Thursday, you're going to see the split volume. You're going to see people migrating out of the June contract and into, out of the September contract and into the December contract. And then by the 11th, second Friday, you want to be in the new contract for sure. With crude oil, it really depends on, where the day lines up in relationship to the weekend and all that. But usually, I just keep it uniform. By Wednesday the 18th, for sure, I'll be on the January contract. Right now, we're on the December contract. However, in reality, the volume might move over on Monday the 16th, Tuesday the 17th. Could be any one of those 3 days. But by the 18th, for sure, be in the new contract. I just keep it uniform for testing because if I go over a day or two too soon, there's still enough volume. Like you can get into, let's say all the volume moves over on Monday, I'd still be in the older contract because there's still enough volume, you could still trade it. So it just keeps it uniform for me. That way I don't have to overthink it. And by the 18th, I'm in the new contract for crude. And then I'll put unleaded and all the other energies over there also on that day. That's how I do it. Make sense? By the way, target 4. What you're witnessing here is like what we've been witnessing for several years now with this trade plan and this chart with Spotlight. And this is why we were so excited to launch Trade a Day. I mean, we went through a lot of iterations and thinking it through and trying to figure out, is this something we can do? How do we make it so everyone can succeed with it, considering Forex is so decentralized and the wild, wild west factor? And just by seeing how today worked, which is really the same as what we've been seeing for years, that's what made us decide to launch our Trade a Day and not to complicate it. Super simple. One chart, one market, one trade plan. It's kind of like catapult trading mentality, only it's using Spotlight, Power Trader. You don't need much more. All right, so just looking at crude oil here, the first trade was a loser. The second trade did not trigger in because of the adjustment. And then the third trade, a winner. And so probably, depending on how many positions you traded, you either are a little ahead, break even, a little behind, but basically done. And now there's the 10 a.m. mini session right there. Short at 03. With an 03 spike, maybe you get short at 02. I don't know if I'd adjust that all the way down to 99, but you could. You could also wait like there's no extra confirmation on a reversal after when you're in a long trend. This could be a reaction. You don't want to get into a reaction and miss an action move up and lose money. So a lot of times what I'll do is I'll wait for it to come up and test these highs and then fail and come back down, and then I'll get into the trade. And I may even adjust it below the key level. No, the 11 a.m. trade plan is not something that needs to be worked on. Here's how that works. When the morning sessions lose, the 11 a.m. session has a huge win rate. Like 80% of the time it wins. That's it. So if the morning session is a winner, we don't even look at the 11 a.m. session. We look at the 11 a.m. session if the morning session loses. Now, if the 8:30 wins and the 9 a.m. loses, we're not going to do the 11 a.m. session because all our testing has us quitting at power of quitting. So if the 8:30 session is a winner, we're not going to do the 11 a.m. session. We're going to do the 11 a.m. session when the morning session, I should say, the 8:30 for sure. Sometimes the 8:30 and the 9 are the same session because the first trade doesn't come until 9 anyway. If it loses, that's when we do the 11 a.m. session because it wins at such a high level. And not trying to overcomplicate the service either. A trade a day really is meant to be a trade a day. We offer extra trades because if you know me by now after all these years, I like to underpromise and overdeliver whenever I can. Kevin agrees. Thank you. Appreciate that. I'll be right back, you guys. All right, so I do want to clarify something, and Stefan, this is mostly for your benefit, but a lot of you might be wondering what I just said about this, and here's the thing. Back testing is what it's all about, and also you want to get good at fast testing. So how do you know if you're getting into a reaction move, which is destined to lose? Maybe you break even if you're lucky. Remember, you want to trade the action side of your trade, not the action side of the price action, not the reaction. Trending markets will stair step, action, reaction, subsequent action, reaction, etc., etc. But when you get late in the trend and you can count the legs up, 1, here's a reaction. 2, maybe 2 goes to here, maybe to here. I don't know. I mean, these are smaller action reactions inside of a bigger one. You might even look at what's happening on a higher time frame. But when you're back testing, let's say okay, 10 a.m., first trade. You could back test taking the trade no matter what, in which case you would have hit your target 1. 9 ticks is too small. Would have ended up being a break even. You'd have to take a second trade now. You could also backtest the idea of not taking that trade at all until the price comes up, fails to make a new high, then comes down, and then you take it. And then you could backtest that scenario as well, or fast test that scenario, and just see how many winners versus losers, and eventually you decide what's best. Because the trade plan that starts at 10 a.m., if you find that it wins a lot without having to overthink things, just take the trade no matter what, it still quits positive most of the time and makes you money, maybe that's all you need. If you find that waiting for the price to come up, test the highs, and then come down has a better win rate, you can learn that from testing. If it already hit money management, like in this case, you would not have taken that trade if you're waiting for it to come up and test the highs and then fail and then come back down, and then maybe you decide that's when you want to take the trade. Not in this case. You'd have to cancel because once it hits money management or stops out, the trade is no longer valid anyway. It's canceled at that point. So you don't get in sync with an earlier trade if it hit money management. If the stop is moved at all, or it's stopped out, you don't get in sync. You wait for the next trade, you see. But these are all rules that you can define make them mechanical, test it, get measurable results. Even if you're fast testing, you could just do chicken scratch counting and see how many win more than the other. Maybe it's a wash. Maybe it's 6 over here, half a dozen over there, and it really doesn't matter. But you learn all that. That's what back testing gives you. That's why it's so important to do. Because, you might say, well, I'm waiting for it to break the, see if it can make a new swing level or not, and then you miss a winner. Now, in this case, you missed a break-even trade, but this is a reaction move. It's just that was a small setup. Here's a subsequent action move, and it might be running out of gas because it's getting late in the trend. And then, a reversal coming after this might have much higher odds. So that's the other thing. Count how many reversals they are, because by the fourth one, your odds go way up. So if you go back down here, this is when the trend is moving up. I mean, I don't know if this one counts. Maybe it does because it failed to make a new low. Maybe that's the first. That's not even a reversal. That's a continuation trade. So you wouldn't count that. Now you're going long. There's reversal 1. Whether it triggers in or not, that one didn't because of an adjustment, but it failed. Here's reversal 2. That one was break even. The third reversal could work, but the fourth reversal, that's when the odds are much higher. In general, it still doesn't mean it's going to win. It could still lose, but the odds are higher that it will win. These are finer points. These are things you learn as you continue to get time and experience with the strategy, with your chart, with your symbol, and backtesting. Backtesting speeds this up because you're going to see it over and over again if you backtest a sufficient amount of sessions. Any questions about that? Check out the YM. You got this breakout move up, and then it comes up and fails to make a new high, and then starts moving lower, and that's what gives you then you get the short trade. And remember, the way the strategy works is if it can get to a break-even position, it's considered a successful trade. And also with the 14-tick, target 1 is a take profit zone. You take profit there for 22 points. It's also finding support on the inclining 20 moving average, so it's got to work through that. Will it go up? Will it go down? We don't know. I mean, that's a pretty strong action move, and it might require more of a reaction before it resumes higher. And it may not. But there's a good chance when you have your action, reaction, subsequent action, let's see if the subsequent action actually occurs. Subsequent action will tend to mirror that first action. Not sure what more there is to do today, you guys. Let me know if anyone has any questions about anything. Look at the pound Aussie still go. Oh, yeah, good. That's a good question, Stefan. So the .D is a unique chart. The .D only gives you stock market hours, or I should say when the actual market is open on the CME. It's not exactly when the stock market is open. It might be a slight difference, but basically it's when the stock market opens at 9:30. That's when the NQ opens. Yeah, exactly. So there's a big difference. And actually, I think if it depends on the strategy you're using, you could test them both. But what the .D chart gives you is it shows you the gaps between yesterday's close and today's open. None of the in-between pre-market and post-market data. And that's useful information. But you have to wait for the indicators to catch up right? It takes a certain amount of bars before the indicators become dependable. That, I use the .D chart for my open spaces concept that I've shown a few times in here, and you'll find that in my book on Amazon. I don't talk about my book much in here, mostly because, it's a beginner's book. It's a day trading quick start guide, and I don't consider anyone in here a beginner. However, the open spaces concept in that book, and then also it kind of re-expresses all my beliefs as far as what's in my no-brainer, steps to success guide, which is in all the training strategies and the 12 powers. I got ebooks for that, but the Amazon book also kind of talks about those things. Same concept, different words. Oh, thank you, Kevin. Yeah, if anyone's interested in the book, there you go. But again, I don't really discuss it much in here because I just don't consider anyone in here a beginner. But thankfully, it's been getting really good reviews. In fact, an influencer on YouTube just picked it up and reviewed it on her YouTube channel and gave it glowing reviews just outside of the Amazon review structure, which I thought was pretty cool. And I am working on a new book right now. The publisher has asked me to do a second book, so I am. And wouldn't you know it, it's all about Forex. I mean, you don't really need a book on that. I would just say trade the pound Aussie with Spotlight Power Trader. You don't need much else. Although Counterpunch is awesome for swing trading Forex, which we use in our ironically named Spotlight Forex Alert service, which doesn't even use Spotlight, uses Counterpunch. So it's funny, I use Spotlight for day trading Forex, but Counterpunch for swing trading Forex. Is there anybody in here who is a Counterpunch Express? I don't think, I seem to recognize all you guys, but there may be someone in here who's using CPX2, and if you are, you could ask me questions about it any time. I'm happy to pull them up, talk about it, etc. But it's an old strategy, even though it's a new version of it. And I would guess most of you in here, if you're using Counterpunch, you're probably using the full Counterpunch Trader anyway. But if there aren't any more questions, I'm going to let you all off the hook, bid you a good day, and see you again back here on Wednesday. Stefan, there might be one other. I know that there's another E-mini, and I forget what it is. I never look at it. I know some people have. John, could you help me? Oh, John's already gone. Oh, that's weird. Yeah, John never even talked more about a Wanda Ninja. Maybe he had an issue, or I don't know. But anyway, there is one other E-mini, but it's, I think, pretty low volume. Does anyone in here know what it is? We used to look at it years ago. I forget. Don't bother with the small crude oil chart. That's not worth it. The QM, that's crude oil though, right, Miles? There's an E-mini, like a stock index E-mini, and I forget what it is. Yeah, those are the four main ones. Stefan, you know, test them, and here's the thing. Learn the 3-step sniff test first, fast test first. Don't start dedicating hours and hours of time to UTA backtesting. Dedicate your time to the sniff test. Look at a chart, look at a symbol, ask the first question, are there enough trades in a session? Yes or no. Look at 10 sessions, you'll see it really fast. Are the trades an appropriate size? That's question number 2. Because if they're too small, you'll just see too many trades, and they'll be noisy, and you'll get chopped up with too many trade costs. So you want to get the right size. If it's too large of a risk, maybe they're the right size and there's enough trades, but it's DAX futures and you can't afford it. So are they the right size? That's an important question to answer yes to. So those two questions are easy. Yeah, but it's not only the correct markets, it's the correct chart, right? Because you could look at a number of different charts on one market. So this is why the sniff test is so great. When you've got an answer to yes, there are enough trades, and yes, the trades are an appropriate size, maybe one trade a day is enough, by the way, if it's a second trade plan at a later start time. Maybe that is enough if it wins a lot. But the third test is the most important, and that's where you count winning and losing and break-even sessions. Now, you might try counting winning and losing trades if you're trying to fast test a specific question. For example, when I showed you the green trade and I said, well, I like to wait to see if it tests the high again and then come back down, that's a specific question. You could fast test that and see. That's when you're fast testing trades. Like you can see the action moves are starting to falter. There's only been 2 reversal trades so far, but now the action moves up are getting less and less. And remember, if a breakout that doesn't follow through might set up a strong move in the opposite direction. Those are all clues. Those are all things you could fast test. But when you're fast testing a trade plan, right, like how you're going to trade something the same way each and every day, you want to define your rules very clearly and keep them simple. 1, symbol. 2, what the chart is. 3, what the strategy is. 4, what's your start time. 5, what's your quitting time. 6, what's your power of quitting goals. Now, you might then add a rule or 2. I'm only going to take this trade if this happens. That's a rule. You could follow it. You could repeat it and duplicate it over and over and over and over. The trick is you have to be able to fast test rules so that you can get accurate, smart results. And what you're looking for is being able to quit with a positive result a vast majority of the time while controlling your drawdown. And you do that with minimal and efficient trading. That's why we use our power of quitting. So if you can get to your target, whatever, 1 or 2, whichever you're deciding, 2 is usually the best unless it's a slower chart, a bigger chart. But your risk-reward ratios start to make sense at target 2. But it doesn't matter even if your risk-reward ratios aren't as good at target 1, but you win a lot, you see? So you have to weigh out winning a lot versus your R to Rs. But the point is that you could fast test that. And then you could look at 100 sessions and go, yeah, hey, it won 78% of its sessions. It lost 6%. I mean, it broke even 6% and it only lost, say, 18 or 17 or 18%. Now you have a possible business, but you still don't know for sure until you take that to the UTA spreadsheet and really flush it out. You see, that's the process. But you could look at 10, 12, 15 different trade plan ideas and fast test them all. And I don't care if it takes you 3 months, it's worth it. Because then the 1 or 2 of them that rise to the top as the best of the best of the best, that's going to be very meaningful for you. That's what you dedicate your time with the UTA spreadsheet. So you got maybe, out of 10 or 12 different trade plans, maybe 4 or 5 of them are good enough, but 1 or 2 of them are great. That's what you focus on. You see, let the cream rise to the top. That's what I mean by that. Okay? You also will learn, well, this would have been way better if. If what? Like you could fast test different start times all in the same test. You can keep track of different start times and just keep different columns. And so when you're going through the effort of fast testing, you can get a lot more information for just a little bit more effort. That's how you leverage your time, you see? And it might not even be start times. It might be some other nuance that you're trying to know, is this better or is this better? You see? Those are the kind of things that you'll end up with a rock-solid trade plan. And the trade plan might not even care about testing if a trade breaks a swing high or not. In fact, You might test a plan that only takes trades in the opposite direction when it breaks through support or resistance and doesn't follow through. Like that could be your trade plan. And maybe you don't even have a start time. You just have a window of time that you look for them. So maybe it's a 2-hour window. Maybe it's from 9 a.m. to 11 a.m. and you're only taking trades that break support and resistance, don't follow through, and then you take the first reversal. So for example, here's crude oil. Well, this is a 5-tick. I don't want to look at the 5-tick. It's too small. Let's look at the 8-tick. The 8-tick didn't give you a trade, but just to give you the idea. Here's resistance, right? The market comes up and breaks resistance, and it's late in a trend. You've got some strong action moves. Will there be another action move that's strong, or will it begin to lose energy? When it breaks resistance and comes up and doesn't follow through, now it starts consolidating up and down. There's a good chance that that's going to set up a strong move in the opposite direction, and it does. Now, how can you take this trade if it doesn't print? Well, it depends on your strategy and if you understand the strategy very well or not. Because you could use the counterpunch trader concept, and if you do, this is a green trade, and it's the first green trade that would follow after a white trade. Because you got your white trade that might be here, whether that triggers in or not, I don't know. But then you got a set of exhausting dots up here. That's your first green trade, which has got very high odds, especially when they're close to, the dots are really close in level, not distance from left to right, but up and down. It's close to the prior set. That's your first green trade. It's also a setup once it breaks resistance and fails to follow through. It could set up a strong move in the opposite direction, right? So you could easily use your exhausting dots in your balance line and your price closing below the balance line concept. See, this is how, do you know the strategy or not, and the principles behind it. You don't need the dots on the chart anymore. All you need is your handy dandy tool, and you could easily just draw from the highest point of the 3 dots to the low of the setup bar a trade setup, and that could be your trade based on the rules and the concepts. You see? Because price action is more important. When it fails to follow through after breaking resistance, the market will move often enough to base a trade plan around this and win at a very high percentage, set up a strong move in the opposite direction. And you have the tools here on the chart to take advantage of that. I know it's higher level, but that's why you're here. This is combining Spotlight Power Trader and Counterpunch Trader, which Spotlight grew out of Counterpunch. I mean, it evolved out of Counterpunch. A Counterpunch is awesome. You could even have a Counterpunch chart and a Spotlight chart, and this trade would have printed. You could have Counterpunch on and turn off the white and purple trades and only look at the green trades. Show you what I mean. Okay, so this is a 377 tick chart. And it kind of did the same thing. It's very similar, right? So it breaks resistance, doesn't follow through. It even fails to make a new high, which is even more corroboration. And here's your first green trade, which isn't that far off, pretty close on the price axis to the furthest up, the white trade. Forget the white trade. The first green trade, and look at the nice strong move down, a totally different chart, but same principle. And if I were to put this on the 8-tick momentum bar, just to compare apples to apples, because that's what I showed you a moment ago on the Spotlight chart, we can make this an 8-tick momentum bar, and you'll see the exact same thing. Yeah, so Miles saying there's a micro gold contract, by the way, and I have no idea. I'm not going to comment. I like to keep things simple. I used to follow so many more things than I do now. But I realize I have too many strategies, and there's just too many possibilities. The only thing I would say that I think is what I wish I was following more, and I may start soon, again, are DAX futures. All right, so let me go ahead and turn off all the trades except the green. So I'm going to turn off the white and turn off the purple, although I don't see any purple here, but just for this. So false on the whites. This would be the same on a Counterpunch Express 2.0 chart. This is the full Counterpunch Trader, but so I turn it off. Remember, I'm looking for reversals, so I'm, you might say, well, look, this failed to break a new low. I mean, it made a new low and failed, so could I go long? Yeah, I guess you can, and it did win too, but it was just well, it was 18 ticks. It wasn't that small. Got perfect. It missed. I think it missed. Well, did it? It was going to 29, and it got as high as 28, so it missed by 1 tick. But for the sake of the shorts, here we are breaking new highs. Remember, the trend is up, so that's the thing. The trend is up. So this isn't really the principle I'm talking about trying to catch a long trade. The trend is up. It breaks resistance, fails, starts chopping around. You get your second set of exhaustion dots right here that fails to make a new high. So this one makes a new high, but the price doesn't follow through. It comes up and fails to make a new high, gives you the first green trade, and that's the exact trade that I just drew. Oh, no, it's not. Well, is it? It looks different. Why does it look different? Hold on. Does it look different? No, I don't even know. So it's going to 87, 77. Yeah, it looks different. Let's take a look at it side by side for a second. Anyway, you understand it's the same principle. I think I got the same charts. 8-tick momentum. Let me just look at something here real quick. Oh, because that's set to 1 minute. It needs to be 1 tick. So the interval was off. This should now look the same. Let's see. Yeah, now it looks the same. So here's the trade I drew with the target of 0194.88. Look, here's 0194.88. Then there's 2 more targets, even lower. But this is the exact same trade with more targets as the one on Counterpunch. You see? Any questions? I mean, all you really need are the exhaustion dots and the balance line. And then the tool, the fib line retracement tool, programmed with Counterpunch and Spotlight targeting. And you're better off than 90% of the traders out there just with that. If you know the strategy, if you understand it. Because remember, when I created Counterpunch and when I created Spotlight, I didn't have the tools that printed the trade right on the chart. I didn't have that. I had to create the strategy first and then trade it, right? I mean, you have the tools. You can do the same thing. Look at the green trades just with Counterpunch. If you want to trade with the trend, and if you want to learn how to trade the counter trend trade that is when support and resistance doesn't follow through, the green trade by itself is pretty darn good. I mean, the more you look at it, the more you go, wow, not every trade wins. Notice a trade that loses is when you're going sideways and up and down. You avoid those. All right, guys, that pretty much does it for me. Hopefully you got your money's worth. Yeah, sure thing, Stefan. My pleasure, Brett. Hope you enjoyed the session. Everyone have a wonderful day, and I'll see you on Wednesday.